Hey, good morning, fellas. This is Ken at Tortoise Capital. This is the Foundation's Q&A check-in for May 7th, 2023. I think I have us at something like meeting number 4. I could be wrong. But there's no limit on the number of these, by the way. So I'm just going to be doing this for the Foundations going forward. So if you're in the sound of my voice and you're a Foundation student and you have questions you want to ask, send them to me with the symbol FQA in the title, in brackets, and then I can sort each of those each week, my email stream, and I can get these on. Now, if you're an active student in this cohort, I've got a few of you here, yours will go to the top of the list. But it's been my experience that there's actually no questions about the Foundations course that are not of interest to all of us. So it behooves us to be open about the fielding questions from the people. Let's do a quick check-in. I'm doing okay here in Kansas. The kids were absolutely amazing yesterday on the soccer field. So proud of them. Had a couple little guys get their first goals at age 6, and it was the most excited they'd been ever. And it was such good times. The Koala staff writer has added capability to do bulk article writing and processing. So last night I set up 3 different writing projects. One of them was to itemize the top 30 educational theories, provide a concise discipline background of it with references and key ideas and leading thinkers and applications and examples of good dissertations in it, in order to populate the Doctor of Education program's reference files for all the guys that are learning how to become administrators and principals and superintendents and do their own educational research. So it did that. I had it generate spiritual character profiles of the top 50 totem animals and their particular emotional qualities to use as spirit guides for us as we explore those parts of ourselves that we want intuitively to work on. And it did that. And then I had it do a profile on the leading 200, because there's that many of them, 200 leading systems thinkers in the world, their biggest ideas, and then it's analyzing the ones that have a direct and immediate application to systems for trading systems development. So that's going to become the basis for a systems thinking workshop. Because when I did the psychological analysis of biases to overcome, the 2 biggest areas that all of the psychologists agreed on was understanding yourself and getting systems to align with it. And then that involved exploring the inner world of emotions, which totem animals help us characterize, export, externalize, and then examine. And then to think systematically in a world that is driven by knee-jerk impulses. So if we can do those 2 things, get ourselves aligned, and then develop robust systems thinking processes, then all we have to do is the third major theme area, which is to ensure that we have a diversification of raw materials for ideas, variety of information to consider for the whole picture as we develop our view of what's going on. In other words, the multi-time frame, multi-lens analysis. And then a series of systematic assessments, which connects really strongly with Hamad's question this morning. So if we can do those things, then we should be able to be well prepared and work on simplified execution in the moment, because we've surrounded ourselves with those 3 qualities. So So that's what the koala staff writer was doing for me last night, and I had a really good night of sleep knowing that he was in there beavering away at it, working really hard. I got to check the beaver to see if he's on that list of totem animals, and I'm not sure the koala was on there. So we might have to go in and update that to get the spirit of the koala and the spirit of the beaver inside our repertoire. So that's my check-in. All is good here in Kansas. We got some soccer academy stuff going later for the kids. And Hamad, how are things on your side of the world?
Things are really good. Ended last week, up on the week about 0.3% in a week. So not complaining, but taking very minimal risk. So to give a perspective, I've been risking 0.02% of my portfolio on every trade. And, that's 10 times the return. Can't complain about that. Last night I played an interesting set in the desert and played some music. I kind of ventured out and tried something new. Played different style of music, and that idea of plan, prepare, execute, and assess was ringing through my head. So I got to record the set and I started listening to it again to assess how the set
Yeah,
went through. So
nice.
it was a lot of fun.
Yeah, what I am finding is this came up in one of the creativity sessions, just how important it is to go to sleep knowing that you've completed your due diligence and let the subconscious work on it. It really is a freeing moment to know that you've done your job of getting to the due diligence point. And then giving yourself an intention that if and when you wake up, which we all hope happens, that you greet the day with gratitude and forgiveness because you have an entire day going forward that you weren't sure you could count on. There's not a person alive that would trade one more day on the earth for $10 million. Nobody. Hey, I'm going to give you the choice. You could have $10 million, but today's your last day, or you can wake up tomorrow. I'll take wake up tomorrow every time. So, when you wake up in the morning, shouldn't that immediately flood you with a sense of such joy, relief, gratitude, excitement, positivity about the unlimited opportunities you get that day to make the changes and support the team and whatever it is that you're aligned with? That's a profound sense of gratitude that we should feel every single morning to start the day, flooded with endorphins. Then do some exercises, some deep breathing to release the nitrogen in our blood and in our lungs to flood the brain with goodness. Damien, how are we doing this morning, sir?
I'm doing fine. I got up early, did some yard work before the rain starts falling down, and I had a aha moment this weekend,
Yeah,
and I'll share with that later on in the other course. But everything is good.
good. Give me a preview of coming attractions on that one.
But the aha moment,
Just
as
the
you know,
title, the title of the short story.
excitement.
Excellent. So good. Looking forward to that one. It's like the best movie trailer ever. Yeah. Greg, how are we doing this morning?
Doing well. I have a slight lag on my camera, so I apologize for that. Everything's good. I was building your indicators, so I'm a little bit behind on, I guess, some of you guys who are trading them. But I built the indicators using the LMA versus the regular moving averages for the Red River. So finally, I have the MACD and the Red River in my trading platform, and everything looks set up. So hopefully, this is the
Yeah.
week where I can post some trades and show you
Yeah.
what I got on this trade.
What platform are you using?
MT4 MetaTrader
Yep.
for the
Yep.
Forex.
Yep.
Yeah.
Cool. And good morning, Mullen. How are we doing?
I'm doing good. I'm doing good. I had actually a really good week. I finally figured out my sort of initial chart frame. Thanks to Hamad, I actually reached out to him and said, "Hey, I have one last piece missing. Can you help me out?" And then we connected over a Zoom. So he helped me out with fine-tuning Red River. So I think I'm at a good place. And rather than waiting for perfection, I think starting next week, I'm going to just start looking at a couple of things that I know about Foundation, and maybe just start posting trades because I think that's how I will learn more rather than wait for 3 more weeks. So generally speaking, in a very happy state.
Very good. Yeah, I can't remember if it was in one of our rooms together where I talked about the need to move from precision planning to decision planning as a shift in mindset in order to really be adaptive to
Mm.
adapt adaptive. That precision planning is about control and perfection, and that depending on what kind of market condition you're in,
Mhm.
you really need to be setting up decision planning so that I have information coming in that allows me to set up the best decision, which is a combination of the stuff that you get from planning. Let's just call that safe trade frames on good targets, plus price. Because this is telling you what the future's becoming. In that mindful moment, if that's the past and the future's where it's going, price is that interface between you and the future. That's your first window into what's going on, right? Price is the direct lens of where it is. So good decision planning means that you got to be as mindful of what the future's telling you as what the past was telling you. If you've got a good planning process, good enough, planning and prep, then you're coming into the decision with the best that you can get to from the past. And then the price is coming in, and actually your planning and prep is telling you which way that you want to go or things that it might do. And then the price is that exact moment that you have to make decisions with. So you get planning and preparation, you have anticipations and possibilities coming. That mindful moment, we're really trying to set up the best decision that we can, and our orientation should be on action, effective action in the world, as opposed to a belief that our perfect planning actually is the world of the future, that all we have to do is get that right. The market says otherwise. So yeah, I think that's connected to what you're talking about. Brian asked me to talk about developing a coaching eye. And it's also pretty strongly connected to Hamad's questions on assessment. And with that in mind, last night I covered, there was only one swing trade frame posted, so I had some time in the microphone. And so I wanted to talk about this. In addition to what I said last night, I want to try to give a executive summary of this. So in the coaching eye, what we're trying to do is get out of the little box that the particular trade has us in. What I want to do, that's like being in the fishbowl. You can't even, you can't see it. So what I want to do is have this coaching mind over here that's going to study this whole series of trades that I'm accumulating from these rules. These rules in prep lead to the trade. And then I get inside that and I get stuck and I get overcome with emotions like fear and greed. And then that leads to a series of performances. And then I want to be able to coach all of the game film. And so developing the coaching eye simply says that there is the trader who's engaging with the trade and price. And then I can learn to step outside that and to be the observer whose only job is to see what's going on and have some standoff room. Now, I'll tell you a personal story. In one of my combat experiences, I was the liaison officer from a conventional mechanized force inside the command post of the senior special ops task force for a particular operation. And I was in a room with the 2-star general commander of that special operations task force that had all the Rangers and Green Berets and guys like that. And inside a command post of about 20-foot square, you had in the middle this table, and around that table were located lieutenant colonels who were the liaison officers out to units in the world that were doing work. And every one of those units was special ops, and they were all doing particular missions. And these guys were sitting in that room with soundproof headsets on and whisper mics, and very carefully coordinating with their units in the field, and then reporting that to a big screen which had information on it that was displaying what the integrated view of the particular list of missions were. Now, against the wall over here was literally a butcher pad in which all of the objectives were handwritten for that particular task force in that mission. And I was just the liaison officer from a conventional unit. So I happen to be standing against the wall right here, just listening to the mission, listening to the command net so I could hear what my unit was doing, and I could report on that. And standing next to me was the 2-star general who was in charge of the entire operation with a cup of coffee. And then I noticed over here in the corner 2 little guys sitting on a chair with suits and ties and a notebook, and all they were doing was writing down everything that was happening. What time was it? Who was saying things? And these guys were preparing notes for the after-action review that we were going to conduct after we successfully accomplished every one of those missions. Because there was absolutely no doubt that we were going to accomplish every mission that was on that list, and we did. And all they were doing there was to observe the command post operations to determine if we were doing things according to our SOP, and determining if we could improve the SOP. So there's 2 things. Are we following our rules? Based on the evidence, is there something that we're doing that could be changed? And so the form that took was plan, prepare, execute, assess. Sustain, improve, and action. And so they were looking at what were the things we did in planning that should be sustained. Now that could be something we did well, and we want to keep doing that. It could be something that we didn't do by intention, and it turns out that it was a good thing we didn't do that. So we kept that out of the plan. Let's make sure that we continue to not do that, right? like paralysis analysis. Hey, we overthought it. We spent too long on the plan and didn't give the boys enough time to prepare. That could be. So if we didn't do that, if we stayed strict to our time frame, we do something like this. If I receive the mission here and I have to execute here, we simply measure that time and then we give 1/5 and 4/5, and we just set that mark on the wall. We said, whatever our planning process is, we are only going to spend 1/5 of the available time maximum before we issue the order about what we're going to do to the subordinate units so that they have time to plan and prepare themselves. And then we're going to spend 4/5 of our time supervising and refining, which is another way of saying preparation. So let's say that in this operation we did that. We want to sustain that. Don't spend too much time in planning. Preserve the time you need for preparation. So that could be, those are all examples of things that could be sustainable. There might have been some things that we did that we shouldn't have done, so we'll note those. There might have been some things that we forgot to do or decided not to do, and it turns out that that was a bad thing. So ways to improve are going to be those things. What should I do less of? What should I stop doing altogether? That kind of stuff, right? And then from that, there could be some very specific things that I'm going to put on my to-do list. So I got to have a to-do list. And that's going to be prioritized at some point by the importance and the frequency of those things. And so everything that's on my action list is going to go up to that to-do list. So once I've done planning, I then look at preparation, execution, and the assessment program itself. I'm going to assess my assessment program. If I set up a command post and I didn't have a way of capturing all the notes of everything that happened, then my assessment plan was not good. So I could actually say, if you want to get really recursive, I can do plan, prepare, and execute on my assessment plan the same way that I do that for my trading plan. And that should be the sound of your brain exploding right there. But that's what we do. So now, after I've gone through that cycle each day, each trade, I have all these things that I want to do. Can I do all of those? No, I cannot. So what I'm going to do is I'm going to pick a couple things that I'm going to make sure that I do those tomorrow. And then once I get those two things, I share that with two people. One is in my journal and my trading plan. I'm going to make an intention to fix those two things tomorrow. And then how am I going to do that? With a SMART goal. I'm going to be specific, measurable, action-oriented. It's going to be relevant to my trading plan, and it has a very specific time element on it. So I'm going to use a SMART goal to make sure that the thing that I chose to do gets activated and taken care of tomorrow. And I put that in my intention and my trading plan, and I also give it to my accountability partner and say, you check me on this. This is my contract. And you judge, or you are the guy that's going to help me as my silent witness to ask me the questions so that I can be accountable to what I said I'm going to do. I'm investing a lot of time and effort into doing this. So let's do it. Now, everything that's on that list, all of those things are going to go up onto my to-do list. The top couple are going to be the ones that I fix tomorrow, but I'm also going to add the other ones to that list and see, hey, the more times that I keep adding that one thing to a list, maybe that's the thing that I ought to do next. The last 7 days in a row, I didn't do my my timeline correctly, my 1/5, 4/5. I did not go to bed with my trading plan for tomorrow completed. So I was going to bed worried and nervous, knowing that I didn't do my due diligence, and I had nightmares, and I woke up feeling rushed and hurried instead of gloriously grateful for a chance to work today. So let's not do that anymore. Let's have something in a SMART goal that says I'm going to complete my trading plan each day. Now what I have is I have a master to-do list, and so everything that I'm doing, maybe the daily after action review for each of my trades, plus my weekly reflection and seeing how the whole week went, plus my monthly reflection, plus the last quarterly reflection I did that gave me a list of top 10 things that I want to concentrate on this quarter, and then my annual reflection, which gave me my overall master plan. Maybe all of those things are places that I capture different sized goals and actions and projects. Maybe I get projects and longer term developmental programs. Like, I want to get better at statistics. Okay, well, that's not something I'm going to do and solve tomorrow, but I might have a program of a 10-week action to do an hour's worth of study a week on statistics according to a schedule. And that comes out of my annual training plan or my quarterly review or my monthly updates. Right? So I budget those times. But my master to-do list encompasses all of those things. And then I make sure that I'm working on using the Kanban technique, that I limit my work in progress to the achievable, rational, reasonable amount of work that I can actually do every day in 50-minute bursts. And then I just keep that sense of urgency. So I know there's things on here that I got to get to. I'll get to them. I got to take care of business. I got to do first things first. But it starts with that daily, and the 2 things I'm going to just fix, by God, tomorrow. I'm just going to fix that. No matter what else happens. I'll get to all these things. But dang it, I walked into the lion's den today, and I didn't do those 2 things that I knew I should have done better. I can't have that happen again. So I'm going to fix those 2. That's the power of the daily, to bring a sense of immediacy to the entire assessment program. So that's sort of the process model going forward. Oops. That's my process model going forward for assessment. And what I talked about there were some things about will and discipline and tools and artifacts and accountability partners and an intention and journals, and then a means by which I can perform continuous improvement. And I got to have that in my culture. That is part of my identity and my value, that I'm going to do the things that it takes to have a system of continuous improvement. That's just going to be committed to doing that. Now, there are ways to do that. There's the how, but there's also the why. Why is that? Because we are imperfect people, and even if we were perfect in one moment, the world changes around us, so we've got to continue to stay connected. That's why we're not going to ever believe that we are perfect for now and forever. We might have moments when we were pretty good, but continuous improvement is an acknowledgement that the world changes and that we are just doing our best all the time, and that we accept and we own the results. So I use that statistical process control that comes out of industrial manufacturing and quality control and the Toyota production system and Ishikawa and Deming and all those guys and Japanese manufacturing, because that's how you do it in the style of trading that I perform. And so assessment, if you survive the trade, that's why risk management matters, so that no one trade ever takes you out of the game. That gives me the time and space in which I can bring my most powerful edge, which is continuous improvement and statistical process control. Statistical process control is how I do the trade frames. Each and every trade is framed around some sense of statistical understanding of the world. That's an edge. But then statistics is also informing the way in which I perform continuous improvement with the Kanban system to minimize work in progress, to do Kaizen incremental improvement, to do Kaikaku transformational design when that's what's demanded, in quality circles of trusted others, in self-directed work teams that work together with accountability to leverage the power of the trading tribe. All of those things go into assessment. So maybe I could give an example of how we did that yesterday. What I'm going to do in order to get to these other ones in the 22 minutes is say the video I just uploaded from last night's session, I went through 2 different histograms of action, and it's going to look something like this. The way we do that is you have a standard set of rules. You have to have a standard set of rules so that we can treat each trade as a member of a group in order to perform statistics. You need at least 30. You don't need more than 50 to do an iteration. I want you to go to tortoisecapital.net and then go listen to Luke and Ken H. in particular, their 2 annual reports where they did this for their entire annual trading process. And you're going to see Luke, who has sets of 50 trades, and he does this work. He did it for 3,000, and he was not only looking at what could he learn from that set of 50, but also categorically was this set of 50 trades better than that set of 50 trades. Not only what are the things he could learn to get better inside here, but what was happening in these groups of 50 trades at a time out to 3,000 trades. And that's how he got so good. And that's what Griff did for the Kata 2 challenge. And that's what Ken H did in order to become a self-directed, autonomous swing trader in his spare time. So, what we're going to do is have a set of rules. We're going to itemize the trades, just capturing the R multiple. Then we're going to build a histogram, and on that histogram, we're going to look at the 0 line, and I'm going to look for 3 things. First is no trades worse than -1. That's the first thing I'm looking at. If that's good, check. The second thing is I'm going to look between -1 and +2. And in there I'm looking for a normalish looking curve that shows me I have a reliable system where most of my trades, about 85% of them probably, are falling in here, and it's positive expectancy. If I have positive expectancy in the space between -1 and +2, that's check. That's the second thing I'm looking for. I'm now getting paid with my routine trading to get better. And then the third thing that I look at is I want to see some trades that are better than 2R. This is the fat right tail that gives us abnormal good gains. Abnormally good gains. And this is the specials that make us leap forward in major ways. Cutting off the left-hand side of the fat tails protects us against those catastrophic losses. The controlled trading process, 85% of the time, 5 out of 6 trades, give us the positive expectancy to do continuous operations forever into the future, because we're positive expectancy. And then 1/6 of the time, we have these abnormally good things which we don't expect but which we appreciate, and we don't let those become the focus of our attention, because it was our attention to detail in the rules that permitted us to be receiving gifts every so often. That's the mindset that I'm looking for, and the technique that I described last night with Luke and Jeff was to show how you list the trades, you do the histogram analysis, you look at the coin flip, you render this into a coin flip, and Jeff's last night shows that he's got a 3-2 coin flip that pays 2-1 already last week, in the second week of him learning to do the Kata 2 challenge, which included the supported spring, or the supported spring crossing and the supported fall crossing, which I'm going to cover in a second. And then if you look at Griff's, he had a 2.3-1 coin flip. Yeah. Wins 5 times out of 7, and it pays 2.5-1. If that's a coin flip, how many times a day do you want to trade that plan? All day, every day, forever, as much as you can, at the smallest level of risk that allows you to achieve your financial goals, and in a way that allows you to trade it strictly according to your rules. So then the other parts of their control chart were, hey, what is my scatter plot? And it says, here's my -1, and here's my +2, and then each trade in sequence gets placed on there as a performance curve, and you can see what the flow of trades during the day were. And then you have a control chart that says, this is what my average win looks like, and it converges on your expectancy. And then we have the histogram. And so that's the details of how to do that, and you'll see that in last night's video with 2 examples and 2 histograms, and you can download the spreadsheet from the chat room just by looking for the word trading log .xls, and it's pretty straightforward how to do that. So that's what I mean by assessment. It's sort of the mindset, the strategic plan, the implementation across every different time. The time frames, those are fractal. It's the same thing that we're doing, only we're doing it on a different time frame. So think of it in terms of fractal. And then the techniques of the trading log is how you do the detailed game film report. Now, the other part of that is the nightly podcast, when you're marking up the charts and you say, this is what I did, this is what I think about, this is what I notice. I didn't even notice this fact and this fact and that fact because I was so busy focused on the particular decisions I made inside here. I didn't even notice these other things. So now what I'm doing is I'm thinking about the trade, and I'm going to notice, and then I'm going to wonder, and then I'm going to decide how I'm going to self-coach. These are the notes that I'm going to make to myself as a result of adopting the coach's eye. That's a set of glasses. So now I've stood apart from my trading self, and now I've adopted the coaching mindset, and I'm just doing that for my own stuff before you even post it in the chat room. You're going to take that trade frame and you mark it up, and then you're going to make your notes and say, these are the coaching notes that I'm making to myself. And Hamad, you're doing that. And then in the bottom, you put in there what you think I'm going to say about it. What do you think I'm going to say? And what I'm looking at is what you did, what you think about it, what you noticed, and then what you say to yourself, and then what you think I'm going to say. And then what you're going to do is you've just done all your due diligence. I'm going to look at your due diligence, and then I'm going to tell you what I say. And then your job is to compare what I said to what you said. There's going to be things that you notice and you said, and then there's going to be things that I say. And then you're going to look at all of the things that we both said, and you're going to say, okay, got it. And then you're going to look at this and say, well, I said these things, but Ken didn't. What does that mean? That's for you to figure out. Hey, Ken said these things, but I didn't say those things. What's that mean? That's for you to figure out. When you start applying this process, you now have adopted the coach's eye, and you're going to just get better at coaching, and you're going to get better at coaching yourself. And then when you are inside that little trade that is pulling you into it and giving you tunnel vision, you're going to say, no, that's okay. Trader, you just trade according to the rules, and we're going to get our results. And I'm going to be over here on the coaching sideline watching my trading process follow its rules, and I'm going to collect the evidence, and then I'm going to put a coaching process on it so that I just get better each and every day. Because I already know that my rules are going to get me to positive expectancy, so that gives me a wedge that protects me against impulsive action, because I can now use that power of the coaching mindset to insulate me from the emotional challenges of every individual trade. That's also why when we frame the trade and we put our little risk box in there and we decide where we're going to enter and where we're going to exit, and why we thought that that was a reasonable to our gain, and then price starts taking off, that's the RL10, and we got into it, and it starts monkeying around. That's why when we go from here to no lose plus dinner for two, and we lock in this goodness, I just earned my coaching fee, because I'm never going to lose money on that trade. That means I'm going to have time and space to be able to perform all of the assessments in the coaching eye, and this guy is just free to go be whatever he's going to win. We have eliminated the loss. That's what we're trying to do. That's what developing the coaching eye will do for us, okay? How do I manage the SSC trades? First of all, know the rules. Harsh winter, bottomed out. It's going to cross the PSAR at some point, and the PSAR is going to flip. I'm putting my manageable risk box in here. I hold my nose. I take the trade. My stop is in. If it fails, I collapsing dragon. If it works, I get my stop to no lose plus dinner for two. Then I engage in a series of trading adjustments with dynamic risk and reward to adjust my stop higher and higher until price itself decides when it's going to exit. And then I start looking for, am I going to be short, or am I going to look for a kata 2? Lather, rinse, and repeat. You've got to turn that into your own personal process with rules that are stated on the time frame that you have chosen, but managed according to that template, and then it becomes the assessment program. That's how you manage it. And the SFC is nothing more than all you're doing is you're waiting for this thing, the SSC, not to succeed. The SSC is not succeeding, and just the SFC is before it crosses into the collapsing dragon, which is an automatic entry, you just decide that you're going to take the short entry inside here. You're empowered by the fact that there was already a harsh winter, which says that that is a pretty safe entry because the dangerous entry, the SSC, is failing. So you got what you wanted. The SFC is the COTA 2 to the downside. So I would go, in fact, if I saw an SSC setup, I'd wait for the SFC and enter, and then when it hits the collapsing dragon, use that to get to no lose plus dinner for 2. That's the lowest risk way in the world to do that. Listen to that explanation one time every day for the next 30 days. That's how I would learn to do that. And then show your work. Here's one way to quickly get to your, this is cheating, so it's good. So let's say that you did your SSC and you set that up. This is a math trick. And you said, there's the legitimate risk box that I'm supposed to take for the SSC, and here's the official collapsing dragon entry. How can I manage that trade so that when so that on average I only take a 0.6 R loss? Set that equal to 0.6, and then say, let me put a buffer in here of 1 R. So maybe this is 60 cents. So that means my 1 R loss would be if I lost $1 per share. Use this to position size. Now, I just follow the rules. I'm out. I took a 0.6 loss. You'll never take a greater loss than 0.6 because the best trade is the one where you stopped and reversed. You can't wait to get into that trade. So you'll never take a loss greater than 0.6. So just set this equal to 1. Hey, do you want your average loss to be 0.3? Figure out what your risk box is. Set that equal to 0.3. Position size off a 2R. So if this was 30 cents, do the math to figure out what your 1R loss is, or whatever. Yeah, your 1R loss. That's like 0.6. I don't know, Jesus. You see what I mean? Multiplying that by, you got to have 2 of those, right? 2.5 of those. So you position size off of what you want the 1R loss to be. You'll never, if you do that, you set that equal to 0.3 or 0.6. Start off with 0.6 because that gives you a larger position size. Okay, so start off with 0.3 because that gives you a smaller position size with real money, and then you'll quickly see that you don't even have an emotional twinge with that because you realize that you didn't lose the full R. And that will allow you just to concentrate on better execution. That is gold. What that was right there was a bag of gold. That was gold, fellas. So when you see later in the day and there's these little COTA 2s, and so my re-entry was something like this, and if I just went with the PSAR flip, this tiny little thing is like that. My standard risk box with the MMRB might be like that. Just pick that one, but execute on the PSAR flip. Done. Then you have trivial losses in real terms and in terms of R. But whatever the first one was, that's going to be the biggest PSAR flip gap of all time. So if you did that and you set that equal to 0.6 and then you position sized off a 1.0 and then kept this as your standard box, all of these later in the day are just gravy because you'll quickly get to no lose plus dinner for 2 on that one and you have no risk. exit order management, stop order versus market order. Just look on Investopedia for the difference between them. I just use market orders 80% of the time because the thing triggered and I want to be in and I'm live trading it. Right now, I want in. Let's go. If it's something on the 30-minute chart, I'll just put a stop order in there and just say when you hit it, convert it to a market order and off we go. There's enough slack in the 30-minute order that wherever I get filled is good enough. Where would I use a stop limit order? If I was setting up an overnight trade where my risk box was here and I wanted to enter here, but I don't want to pay more than this. So I can say tomorrow, wherever, if it opens inside here, buy it. But if it opens higher than that, don't buy it because it was an abnormally large gap and I don't want just an automatic entry because something unusual is happening. So pay up to this, but don't pay more than that. This one, I think, yeah. This one said, hey, Doc Long, on your cliff trade on 5-4, it looked like it left the zero state, or it left the box. You put the trade on. Here, it moved down to +1 and then reversed all the way back to here and then collapsed, and you just stayed on it. Why? Why didn't you just no lose plus dinner for 2? And the answer I gave him was, at the moment, there was market, sector, and peer group pressure, which was making Cliff the worst performer of all the metals who were terrible, and the market was collapsing. And so in that time, I had every reason to believe this thing was going to fail. It was on 30-minute charts, so I'm really just watching the RL10, and the price bars are noise, as long as I'm out of my little warning zone. So I just don't care. Just go until it's so clear that I can get out of here. Now, what happens if I follow my routine guidance? Okay, so that happens maybe this happens maybe 1 out of 100 times or 20 times where I don't take that. But what if I just took that and then it came to here and reversed? Where am I getting back in? I'm automatically getting back in right here. New low of the day and smash. This thing went on to like 7R. So the only thing I'm giving up is I made this, and I don't capture that little bit, which is about a 0.5 drag. Pay the price. Take a 0.5 drag and be 100% effective on the rules. You'll be happy you did. But if you have trader quality number and you can look at market, sector, peer group, momentum, time of day, and you have markets money to play with, you could make a decision to do that. Just document it. Why did I make that decision to violate the rules? Study the results. Use your coaching process and decide if that's a thing that I want to do. That's a thing I want to do because I have hundreds, if not thousands, of case studies where my judgment in the moment is reliable enough as long as I'm not taking losses. So I just keep going. Naked and unafraid. But supported by continuous process. Last one, Jim asked me, he's come back after a while. I had recordings of specific boot camps where I did tailored trading processes and lessons learned that led to live trading with guys. And we did that from 2009 to about 2020. Those are all recorded and available for some small fee to cover costs. I would tell you, Jim, when you're in the sound of this, the best thing you can do in that period is the nightly podcasts, because that's 1,000 lessons of live coaching, review of the daily trade frame, affirmations, insights, bar-by-bar trading. I would also say take the bar-by-bar trading course. I think we're selling that for $497. And that took all of the, not all of them, but it took all the ones from Ken H. and Griff and a few other traders and there's about 20 hours of detailed live coaching on live price action recorded, which will teach you how to trade in this style. That's the best course you can take when you're ready to drill on all of the like, it looks very much like sniper trades of the day, the same thing that I'm doing there. If you're using the sniper trade of the day every night correctly, you are watching what I'm doing, and you're anticipating what I'm doing, and you're noting what I'm doing, and then you're looking for questions to ask me and looking for what your follow-throughs would be. If you want to do that with a stop action camera, take the bar by bar trading. So that's everything I got on there. That's our hour. I'm going to get this published and posted. I'm going to close it up real quick so that it starts processing, and then I'll open the room back up in about 3 minutes. Okay? So great questions. If I didn't answer it enough, send me another question. But I think there's gold in that. And I would also listen to watch the video from last night where I did the specific histograms on Jeff and Griff for the Kata 2 challenge, because
Just a
they're
quick
pretty
one.
impressive.
I don't think you posted. I don't think you posted the video from last night, because I was just checking the video.
I
The video
just
is on-
it just got uploaded.
Okay.
It should be on the YouTube channel. If you go to the YouTube, it should be there. I haven't even had time to put the link in to the course and to the list. But if you go to the YouTube channel, it's right there, right away. And then I'll get it added after the creativity course. But that's where it is. Okay. All right. That's everything I got. Good work again today, guys. See you soon.